What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, March 26th. Alright guys, Nvidia stock here today on Monday finished the day up $7.13 a share. That's plus 0.76%. And we are creeping higher with a nice push off the open this morning after a little bit of a pop and fade. Then we got that nice push. So let's take a look here at Nvidia, try to pull out as much day-to-day bias as we possibly can from a variety of sources using psychology and data. So let's get started here with our daily ritual, the volume profile analysis bias, analysis on the volume profile, trying to pull out some bias, right? Here on the 5-minute chart. So let's circle up our areas of interest here on Nvidia today. Obviously, I want to get that push to intraday highs, and then the more aggressive portion of this fade that we saw. Those are really the only two areas I'm interested in. Of course, I want to see the little fade after that move topped out. So let's take a look here. Now we know, contextually speaking, we know that that first bar is going to be the, if not one of the highest volume bars on the day, and then we expect that fade, okay? Now, we got that fade. We saw a few little pops in volume on those green bars, which normally we really wouldn't be able to pull much out of. However, if you look a little closer here, we saw that initial push. We got that volume pop, which really wasn't a whole lot, right? That was kind of the beginning of what I'm looking at here. And then we got that consolidation, little pullback, a couple of red 5-minute bars, and we got a big drop off in volume. Then on the push to intraday highs, right, we saw an increase yet again in volume, just very short term though. And then on the pullback there, then we also got a fade. So when we're looking at this in context, I can see that there's very obviously a slight bullish bias in the profile itself. You know, it's not 6 consecutive bars that we're seeing elevated volume, but when we compare it to the little fades on the back end, it's certainly there, okay? But if we take a look at that second move that I wanted to take a look at, we see here that we all got kind of the same deal on that fade portion, right? We got the fade, and then the slight little recovery that we saw the pop in volume, a little bit of bearish bias, and then the, fade off as we moved into that back end of that move there. So really, you saw kind of equal parts, both bullish and bearish bias at different points during the day today. Now, I know a lot of you guys are going to be looking at this. Again, we expect to see this here, right? We expect to see that increase in volume, that taper up into the close each and every day. That's very, very common. That's nothing out of the ordinary at all. And then that last, big bar that kind of matches the opening bar, it happened to be a red candle, but remember, it's very common, and we've been seeing this a lot as of late on big blue chip stocks, to see really, really large first volume bars after the closing bell. As what I really think is going on, we see funds and institutions just rebalancing after the bell. And these candles are very frequently just battle bars. There's very little actual movement with really high volume. So what we're seeing is just a lot of buying and selling, pumping up that volume, resulting in not really a whole heck of a lot of actual movement when it's all said and done, as funds and institutions do the necessary daily rebalancing. And most of that is most likely algorithmically done. Now, let's go through our psychological self-fulfilling prophecy levels on our 3 most important charts. And then at the end there, we'll get to our, what the options traders are telling us in terms of price targets tomorrow, as well as options bias. However, these charts, they have so many eyeballs. And you'll notice my charts are very clean, right? The reason for that is because I only want the indicators on the charts that have the most eyeballs, right? For both of those, the time frame and the indicator. So let's take a look here. Listen, by the way, if you haven't done so already, please subscribe to the channel. I really do appreciate it. My goal here is to hit 10,000 by the end of April. So here on the 30-minute chart, guys, that white line is the ever so popular 50-period moving average, and you can see that we had a little bit of a sloppy test in respect on Friday. That was okay. Now today, we saw getting close to a couple of tests pre-market and then off the open. We never actually touched it. That's fine. It's very rarely going to be perfect. And we held that off. We held off a true test, which doesn't hurt to see if you are a bull on the name, of course. So listen, looking ahead to tomorrow, from a bullish perspective, any downside test at that 50 period, I'm going to want to see that hold. I'm going to want to see a continuation, this 50 period continuing to ascend upside, ideally claiming 950. Okay, just getting ahead of that psychological round number of 950. Just adding any additional support, any additional assistance to the name pushing higher. Bears, your primary goal on the 30-minute chart tomorrow is to keep that 50 period under 950, but really, either way, whether it reclaims 950 or not, it's to get down beneath and give up that 50 period for a short-term break. Even better would be a retest of that level and then a confirmation of new resistance on big volume. Now, let's take a look at the 4-hour chart here. You can see that we're starting to pull away from that 50 period, which if you're a bull is a nice thing to see. But, you know, the work's never done, truthfully. Bulls, we're starting to put a little bit of distance between us and that 50 period and understand that the bears are going to look at that and say, well, I suppose they would look at it from this perspective. They're going to be looking at that and saying, okay, there's 5.1% between the stock price and the 50. So realistically, bulls, rather than having the stock come back and retest the 50 and giving up all that, you know, shorter term gain that we have had here in the last few days, what you'd really want is just to see that 50 period aggressively move upside as quickly as possible. So when that next test comes, it requires less of a backslide. One great thing that did happen today here on the 4-hour chart, though, for the bulls, see that 50 period, claim $900. That's a great thing to see. We talked about that on Friday, and we got that here on Monday. Now, the most important chart of all, this is the one that we don't skip ever. If there's a single chart that you should be blind to, it certainly should never be the daily. Now, I'm not sure if you noticed today, but we got very close to testing that all-time high of 974. We got as high as, you look there, 967.66. Okay, you can actually see that up here, but if you look right under the 30-minute by my cursor, if you hover over the candle, it'll tell you the high. Now, there's really two stories here tomorrow. Bears, you guys, really your only story is to reject 950. Okay, we pulled back to around 950 here intraday into the close. If you're a bear, you ideally want to stay below 950 because that's kind of the last frontier in terms of any psychological level at all ahead of that all-time high. And, you know, we know that when Nvidia blasts through an all-time high, in this case, it's not unlikely, you know, 1,000's on the menu. It's time to start talking about it. So bears, really holding off 950 would be a great way to at least delay that or prevent that. But bulls, you should look at 950 the opposite way. A hold of 950 gives the stock just perhaps the bit of psychological strength that it may need to push up toward a real test of all-time highs and start to trigger a little bit of that FOMO as it pushes through all-time highs, ideally not getting rejected, right? And attracting enough fear of missing out around the world as it hits everybody's scanner on the planet. Paying very close attention, I should say, to those two areas here tomorrow, Tuesday. Now, the expected move here tomorrow, let's take a look. The next expiration on Nvidia is March 28th. Okay, that's Thursday, the last trading day of this week. Of course, remember, Friday's off. The expected move by close on Thursday is plus or minus $38.45. Now, being that there's no earnings reports between now and then, we can look at that just, again, a very primitive perspective and just, okay, if we divide that by 3, the options chain is currently pricing in a $12.82 move approximately per trading day. But that's assuming either 3 red days or 3 green days in a row, right? If you say 2 and 1 or 1 and 2, well, now in order to get that plus or minus $38 move, you're dealing with a lot more volatility each day if you have a mix of green and red days. You follow what I mean? But if we take that 3 in a row mentality and just take that end of week expected move divided by 3, the expected move tomorrow is less than $13 a share, which really says that the option traders are expecting, anywhere between 960 and 965 to 935 to 940. But again, don't forget that if we see a mix of green and red days, which is the more likely scenario, then you're dealing with more volatility each day, okay? Now, understand what expected move actually is. it's priced into each particular expiration based on how the implied volatility in each expiration is currently priced, which is priced in by the traders themselves. So we're getting a big sample size of opinions that ends up with that result. Now, that is the volatility expectation. Okay. The directional bias comes from all of the analysis that we've done, plus this. Take a look here. Total contracts traded today, 1.42 million. And of that 1.4 million, we have 871,000 calls today, 551,000 puts. So we are seeing a call side bias on the overall ratio. Now, the short-term bets, those short-term speculators, that 0 to 20 delta range, a little more undecided. 280,000 calls and just under 304,000 puts. However, you start moving into closer to at the money, and then those in the money contracts, that midterm and then a little bit longer term mentality on average, based on the average expiration, and you start getting more and more call side bias. Listen, if you enjoyed that information and your goal here is to try to expedite your process of whether that's going part-time, maybe even full-time as a trader, I highly encourage you to check out the Roensch Capital Gold server. Each day in there, I'm sending out my personal scalp setup alerts, in-play stock alerts, swing trade setup alerts as they come, human verified by me, unusual options activity. I've been tracking that for years. That's how I kind of keep track of what the whales are doing, as well as, of course, my platinum one-on-one group that I work with every single day. I think that is the best option if you're looking for, more one-on-one support. I go back and forth with those members on a daily basis with either type or typically voice messages. Take a look at that at the link in the pinned comment. Appreciate you guys. Leave a like on the way out, and I'll see you in the next one.